Yo, so this is going to be a review of a trade setup during the London Killzone, which happens between 2 a.m. and 5 a.m. New York time. This is using ICT's concepts. I'm going to do, it's a run on buy side liquidity and then a market structure shift into a breaker. So this pink box here is a daily fair value gap. That white line is consequent encouragement, which is the midpoint, and we can see that price has been respecting this. Pulled into this BISI here, pulled into it there, ran buy side here. So let's just mark this off as buy side. So the kill zones is where you're supposed to enter. So 2 a.m. to 5 a.m. is the London kill zone. So 2 a.m. here. So anywhere from this you can enter. So we go on to the 5 minutes. So price has ran this high. It's also tapped into the fair value gap again on the daily. It's then broken lower. So there's a low here. So it's displaced lower. So this is called the 2022 model. So literally, let me just delete it now. So there's fair value gap there. So it runs buy side, market structure shift with displacement. It comes into the fair value gap. So that fair value gap there is the 2022 model. And where can you target? Target the low here. And it's already just taken it out. So that's a nice setup. Stops could just be above. Could be above this high here. If you want to be conservative, you can put it above that high there. But you can literally just put it above this high of the candle here. So if we're taking a look, if we want to look a little bit deeper into it, price makes a high, a low, a higher high. So a low high and a lower low here. So this candle here, these two candles is a bearish breaker. But if you want to just refine it down, you just refine it down to this candle here. If we draw that across, and let's just delete that fair value gap. So this is a bearish breaker here. If we take a look at the mean threshold of the bearish breaker, which is the midpoint, which is now this yellowy orange line. Let's go down into the 1 minute. Look at the way the price, when pulls up to the breaker, doesn't close above the mean threshold. So that's algorithmic right there. So yeah, your entry, so could be this fair value gap here. So enter. Anywhere in here, you can go the low of the fair value gap, you can go the midpoint of the fair value gap. Stops, I would be above there, potentially the consequent encouragement of this wick here. So like, I'd say just above there, so 2.3 pips. And then target would be this low here. So about 15 pips in for take profit. And so let's just delete this now again. Delete this. Keep it neat on the charts. So the run from the high to the low. Let's find where the premium discount is. So from there to there. So anywhere in this red area is where you should be looking to sell. Once price gets into this green box, then it's no longer in a premium, and the probability of it is a little bit lower for you. So yeah, again, we're looking to see if you could pyramid into it. There's not too much in my opinion, apart from there's a high, a low, a high, high, then a lower low, runs into this bearish breaker here. So let me just delete again, make it a little bit neater. So here, these 3 candles is a bearish breaker. Bearish breaker, there's a fair value gap there. So obviously cut through candles here. So there's a fair value gap there, and there's also a fair value gap there. That candle there is a premium inversion fair value gap. So price could pull lower, pull back into that. So that could be a pyramid there. But that first entry up here, I'll be happy with. So yeah, that is a nice trade. Hope that you understand that, and yeah, comment below if you see anything else, and if you've got any questions or anything. So yeah, thanks for watching. Shout out to the Inner Circle Trader. You can learn this for free on YouTube. Yeah, be safe.